Guys, today we are talking about home insurance. Home insurance, also commonly called homeowners insurance, often abbreviated in the US real estate industry as HOI, is a type of property insurance that covers a private residence. It is an insurance policy that combines various personal insurance protection, which can include losses according to one's home. It contains loss of use, additional living expenses, or loss of other personal possession of the homeowner, as well as liability insurance for accidents that may happen at the home or at the hands of the homeowner within the policy treaty. Additionally, homeowner insurance provides financial protection against disasters. A standard homeowner insurance policy insurance the insurance itself is along with the things kept inside. Overview: homeowner owner policy is a multiple lines insurance policy, meaning that include both property insurance and liability coverage with an invisible individual premium, meaning that a single premium is paid for all risks. That means that it covers both damage to one's property and liability of for any injuries and property damage caused by the owner or members of his or her family to other people. It may also include damage caused by household pets. The US uses standardized policy forms that divide coverage into several categories. Coverage limits are typical provides as a percentage of the primary coverage A, which is coverage of all the mains during the cost of homeowner insurance often depends on on what it would cost to replace the house and which additional endorsement or riders are attached to the policy. The insurance policy is a legal contract between the insurance carrier's insurance policy company and the name insured. In short, it is a contract to indemnity and will put the insured back to state he or she was in prior to the loss. Typically, claims due to floods or war, whose definition typical includes a nuclear explosion for any source, are included from coverage among us other standard inclusion like termist special insurance can be purchased for these possibilities, including floods insurance the adjusted to reflect the cost of replacement, usually upon application of an inflation factor or a cost index pricing. Further information, replacement value and home insurance in the United States. Major factor in price estimation include location coverage and the amount of insurance which is based on the estimated cost of liability, the home replacement cost. If if insufficient coverage is purchased to rebuild the home, the claim payout may be subject to a co-insurance penalty. In this scenario, the insured will be subject to an out-of-pocket fee as a penalty. Insurance use vendors to estimate the cost, including for logic, sus- subsidiary, Marshall, ship, Bosch, varies property profile and E2 value, but leave the responsibility ultimately up to the consumer. In 2013, a survey found that about 60% of homes are undervalued by an estimated 17%. In some cases, estimate can be too low because of demand surge after a catastrophe. As a safeguard against a wrong estimate. Some insurers offer extending replacement cost at once endorsement, which provide extra coverage if the limit is reached. Prices may be lower if the house is situated next to a fire station or exploited with fire sprinkler and fire alarms. If the house exhibits wind mitigation measures such as hurricane shutters, or if the house has a security system and has insured approved lock installed, typically payment is made annually. Perpetual insurance, which certain in, indefinitely, can also be obtained in certain areas. Covered perils. Home insurance offers coverage on our named perils and open perils basis. A named perils policy is one that provide coverage for a loss specifically listed on the policy. If it's not listed, then it's not covered. And open perils policy is broader in the sense that it will provide coverage for all losses expect those especially included on your policy. For insurance policies that cover specific named perils, the insurer frequently offers a choice between one policy that will cover a basic set of specific perils and another policy that covers the same basic set plus several additional perils as discussed below. Together with an open peril aka special form policy, these two grouping of named perils allow the insurer to offer a choice among three types of policy with three levels of coverage, which can be priced in a fair and accurate manner and appeal to a variety of resident owners as well as owner of apartment buildings and condominium association. Thank you for watching my video. Like and subscribe also.